Hello and welcome. I'm Blair Blackwell, and this is the Daily Market Brief. Let's catch up on what's moving in markets today.
Good morning. It's Monday, February 23rd, and we're setting up for the New York Open. Trade policy turbulence is driving the narrative after a court ruling and fresh tariff threats, while safe haven demand is firm and Iran signals new nuclear talks that could shape oil and broader risk. Let's start with the shifting trade picture. After the Supreme Court curtailed parts of earlier tariffs, the White House moved to a blanket 15% levy under a different statute, and has even floated using licenses in place of tariffs. European officials are pushing back, warning deals could be at risk, and the European Parliament has paused a vote on the EU-US trade agreement until midweek. A trade body notes US allies like the UK and EU could face higher duties, while some rivals see relief, and the tariff rhetoric out of Washington remains loud. Markets for now are digesting rather than panicking. On policy and currencies, the Federal Reserve's Chris Waller put the focus squarely on the next jobs report as the key input for a March decision, not the court ruling. Strategists broadly see a softer dollar trend later this year if U.S. growth cools, though today's move isn't decisive. In Europe, one bank flags inflation risks tilting higher beyond 2026, even as headline readings near target in the first half. Europe's data pulse is mixed. Belgian business sentiment slid back to mid-2025 levels, with broad weakness in trade and manufacturing, while Germany's IFO survey nudged slightly above expectations. In the UK, easing expectations are building at the Bank of England, and with Japan on holiday, sterling against the yen is drifting within a recent range. Geopolitics adds another layer. Iran appears open to a third round of Omani-mediated nuclear talks with U.S. negotiators on February 26 in Geneva, a development to watch for oil and risk appetite. In the U.S., the Supreme Court hears ExxonMobil's claim over assets seized in Cuba, a legal test with implications for energy majors. Turning to markets, caution prevails. The dollar started softer on the tariff reset, then steadied. Euro-dollar is little changed, and dollar-yen is off its lows as yields edge down. Safe havens are in demand, with the Swiss franc firm, and gold pushing to a 3-week high above $5,100. Silver stronger as well. Oil is underpinned by U.S.-Iran risk, while European stocks are mixed and U.S. futures lean lower. Looking ahead, it's a relatively quiet data calendar, so headlines may drive. Watch the European Parliament's midweek trade session, Thursday's Geneva talks on Iran, and in the U.S. the build-up to February employment data. The mechanics of the new 150-day tariff window also bear monitoring. You should be watching the euro against the U.S. dollar for headline-driven two-way trade around a steady core trend, and the dollar against the yen for a drift lower if yields stay heavy. Keep an eye on dollar-franc for haven-led dollar softness, and on gold for an uptrend if tariff and Middle East uncertainty persist. Crude could stay bid on geopolitical risk, but any diplomatic progress could cap rallies. Sterling yen may remain soft within its range as UK easing expectations firm. In short, policy uncertainty is high and positioning is cautious, with safe havens in the lead while markets wait for clarity.
That's it for today's edition of the Daily Market Brief. Thanks for listening. I'm Blair Blackwell. This podcast is for informational purposes only and does not constitute financial advice, trading recommendations, or investment guidance.